Okay, we're going to go ahead and get started. I'm Amy Sherman. I'm the president of the Northwest Douglas County Chamber and Economic Development Council Welcome Corporation. I know I've been saying that for 8 years. I don't know where that came from. Welcome to our membership luncheon. We're excited to see some familiar faces and get an update on what's going on with COVID-19 from Robert Wareham. If we have time at the end, we're going to see if anyone has some announcements they'd like to share. So feel free to message me or just be thinking about any announcements you want to share. I know the libraries probably has some updates for us. So we'll do that at the end of our presentation. A couple things. We are going to open the office again on June 1st, but with a rotating schedule. So there'll be one of us there every day. And we'll start doing some small groups depending on the governor's new order after next weekend. We'll start doing some small groups in our conference room. So stay tuned on that, but we're excited to have a little sense of normalcy and at least have the office open again. We did decide to move forward with our golf tournament July 31st at Arrowhead, and they're excited to have us. Food service and start times may look a little different based on the guidelines, but we're still going to have a great time. And people are already signing up, so that's really exciting. I think people are ready to get out on the golf course. So is Robert back?
I am.
Okay, great. He went to get a drink of water. All right, I'm going to go ahead and introduce Robert Wareham. This is his second or fourth Zoom call for our membership, and he's a wealth of knowledge. We sure appreciate him. He's also the security for our office. I hear he picked up some checks outside our front door yesterday, so thank you. Robert Wareham is Managing Director and CEO of the Law Center, and he's on the Chamber Management Committee, was a former Chamber board member before it became a management committee, but always been involved, and we're super grateful for everything you're doing for us. So I'm going to just turn it over to Robert, and he'll give you an update on the PPP. And I'll turn it over to you, Robert.
All right. Is my PowerPoint screen showing just as a test? Okay.
Yes.
So I see you nodding. I will shut it off for a minute so that I can talk to you folks. It's been an interesting month or so since we were last doing this. As all of you know, the PPP funds and the EIDL, the EIDL funds ran out very shortly after the programs were opened up. And because Congress had basically gone into recess and sent all the congressmen and senators home, they couldn't vote. They didn't have some of the procedural things in place. I won't make any political commentaries, but those who know me know what I'm talking about. But I mean, they basically went home and ate ice cream for a week while we tried to figure out a way to survive without means to pay our employees. But fortunately, CARES 2 did get passed. It threw another bunch of money in there. I got an email yesterday from the SBA saying that there was still like $150 billion left in PPP money that could go out. So I would hope that everybody that's on this call has already applied. I don't know, Andre, do we have the ability to let people do a comment or something on the side? If there's someone who hasn't applied, that would be interesting. But I'm seeing some of the faces there, and it looks like most of the folks applied earlier. I will share with you our own experience. The loan applications opened up on April 3rd. We had our application in literally the same day with BOK Financial, the former Colorado Business Bank. I have to tell you, my banker did a phenomenal job. He worked through the weekend. I was getting emails from him saying, hey, your Social Security got truncated, send me that form again. They had us approved on Friday, April 10th. I filled out all of the documents online and signed them. And at about 4:15 p.m. on April 10th, I received $116,000 into our special set-aside account for payroll. And of course, that triggered what we refer to as the covered period for me. So we'll talk about that some. The other thing that I did is I applied for the economic impact disaster loan. And I actually applied twice. I applied once before CARES, and then when CARES passed, they sent an email and asked us to go back and apply again. I applied for that again. It took probably about 2.5 weeks. I later found out in talking to them that part of that delay was caused by the 1-week period where they were out of money. But as soon as the money came back in, I actually called the number where it said on the application, call for customer assistance. And of course, I expected an experience like when you call the IRS and they tell you, you know, you're 120th in line and it's a 2-hour wait. And if you can believe this, it played me a brief recording. And right after that, a live agent answered. I told him about my loan. He looked at it and he says, yeah, he says, if you're already there and you've already done approved the amount, you should have paperwork within the next week. And I think it was probably within 3 days that they sent me the loan application and agreement and acceptance. And again, it was completely a digital experience. And we had the EIDL money in our account within about 48 hours after that. So we're going to touch on both accounts today. If there's any way of people letting us know if anyone else has an EIDL over there, I'll go over some of the stuff with that. But we'll deal primarily with the PPP. And the first thing I want to do is and I'll put it on slideshow here. All right, so comparing the two loans again, just for review, payroll protection is obtained from a local financial institution. I think most of us have probably done that. Used for payroll expenses February 15th through June 30th, 2020, as well as enumerated overhead expenses, mortgage interest, rent, utilities, which are rather broadly defined, the utilities. Maximum of $10 million, no personal guarantee, no payments the first 6 months of the loan, and then 1% interest for a 2-year term after that. And this is the one that has the potential of forgiveness. And that's really the main purpose of today's video conference and webinar, is to let's talk about the forgiveness and what you need to do to make sure that happens. On the other side, we've got the EIDL loan, the EIDL, Economic Impact Disaster Loan. Those are loans that have been around for a long time. However, the CARES Act went in and made substantial changes to them. It used to be that you had to provide collateral and personal guarantees over $25,000. Now, collateral and personal guarantees are not required for under $200,000. So, for example, I was shocked. They sent me a loan approval for $500,000. These people clearly don't know me. So I took the little thermometer and lowered it down and said, no, I'll borrow $200,000 because I knew I wouldn't have to make a personal guarantee or pledge collateral other than our receivables and our business and things like that. But I didn't have to put up my house or real property or anything. You're dealing directly with the SBA on an EIDL loan, okay? And the purpose of an EIDL loan is broader. It is to cover your operating expenses over the next 6 months. So, you know, when you look at this, there are some things in there, and they'll give you the loan documents that tell you this is what you can use it for. I mean, it kind of makes sense. It's rational. Don't go pay off your auto loan with it, but you can use it to make the monthly payments on the auto loan. Don't give yourself a huge bonus with it or any other principals in your firm. It's not intended for that. But other than that, you can use it to pay the rent. You can use it to pay your utilities. A lot broader use than your payroll protection plan loan. If you had an EIDL prior to payroll protection, I don't know anyone who did that. You can use the payroll protection to pay off the prior EIDL if you want to. The maximum of those is $2 million. And it does require the collaterals and personal guarantees over $200,000. The nice thing is you're borrowing at 3.75% interest over a 30-year term, but it is a true loan. It doesn't have any forgiveness aspects to it. But the way we used it when we got it in, we basically looked at, okay, what are all of our current expenses? What have we got? We had run up because our revenue plummeted. I saw some data on our case management software is in the cloud. So they have the data on tens of thousands of attorneys nationwide who created new matters. And I mean, you should see this graph starting in March. It just plummeted. There were no new matters created virtually nationwide. So it has really hit firms like ours very hard. Without these government assistance loans, we probably wouldn't still be here today. We ran up the corporate card early on, but we paid that all off with the EIDL because obviously that has a higher interest rate. All right, so how many of you read your PPP documents very carefully when you got them, or your EIDL documents? It's real important that you read these carefully, because stuffed into them are little things like non-discrimination posters, which you are required to post. And I'm not suggesting the SBA has enough people to go around doing audits and visiting you, but somebody could walk into your place of business if you had one of these loans and look around and go, where is your non-discrimination poster? And you have to put it, you can't just put it, when I first showed it to everybody else in the office, they said, oh, well, we'll just hang that back with the labor posters in the break room. No, these are non-discrimination for clients as well as employees. So the SBA regulations specifically require that it be posted in a public place, visible to the public. So we will be posting it on the wall in our lobby. We are going to use the wall that is behind the door when you walk in. So we're not making it a centerpiece, but yeah, go down to Office Depot, get a couple of those little black document frames, put them in there. They provide you the poster in English and in Spanish, so we're hanging them both just to be safe, but make sure you're in compliance. When you take money to the federal government, there's always going to be strings attached. Secondly, in terms of compliance, be sure you are aware of what is or is not an eligible expenditure. Go back and look at it. It doesn't mean that there aren't some gray areas and some judgment calls you could make. But don't make ineligible expenditures. If you make them recklessly or negligently, shall we say, without any criminal mens rea or mental state, probably what's going to happen is they're going to ask for the money back. Okay, they may attempt to assess some civil penalties to you. But if you do it in an intentional sort of way and you misappropriate those funds, you could in fact be charged with a criminal offense. And I would remind you, unlike state law, federal law, where many people get in trouble is if the SBA or somebody shows up at your place of business and starts to talk to you about the uses of your loan, even if the uses of the loan fell within a gray area, or even if they were completely legitimate, but you are not truthful to that federal agent, it is a federal felony to lie to a federal agent. And there have been plenty in the headlines about people being charged for lying, and that's exactly what they're talking to. So whether it's the IRS, the FBI, the SBA, whoever it is, you want to be sure and be truthful about it, and then let the chips fall where they may. If you're too truthful, they're not going to bring criminal charges against you. They're going to say, well, that was ineligible expenditure, so we'd like to just have you reimburse it. Maintain accounting records. You are contractually required to maintain good accounting records. They want you to maintain them, and I don't have my loan agreement right in front of me, but I think you have to maintain them for 3 years after your loan is paid off for the prior 5 years. In other words, so if you carry your EIDL loan out over 20 years, you don't have to maintain 20 years worth of financial records. They're going to ask you to maintain the most recent 5 years of accounting records and to maintain those through 3 years after the maturity of your loan. And that is obviously for the purpose that they can come back and audit you. Now, your PPP loan, unlike your EIDL loan, your PPP loan, that's got a maturity date of 2 years if it isn't forgiven, all right? And it could be that a portion of it might not be forgiven because you didn't use the proper 75-25 split or something. We'll talk about that in a minute. But that is the most important thing. So if you get nothing else out of this, it pays to keep very good records. If you haven't been good using QuickBooks or some other program like that for your business in the past, now is certainly time to adopt that new policy, and just be prepared to have those records reviewed. In the case of the PPP, they're going to probably be, if they're asked for production of those records, it'll be to your local bank, and they sort of have an immunity as long as they do a good faith job in looking at your records. They can move on from there. Okay, so we already talked about the EIDL loan. I will tell you it does. They did say it would take about 4 to 6 weeks to process. You still qualify to apply for that now. So even if you already got your PPP and you're looking at this and going, you know, things haven't turned around as quickly as I thought they would, I would like to have a little additional cushion. I mean, from our standpoint, we just brought everything current, so we don't have any installment or any kind of debt right at the moment. We don't owe anyone, and we have this money sitting in a bank account that's basically there as a line of credit that we're paying 3% interest on while it's there. Hopefully the day will come down the road where we say, you know, I think we're going to be fine, so we can just go ahead and repay the whole thing and stop paying the interest. It is extremely easy to do. So if you haven't tried it yet with EIDL, they're basically going to look at your gross revenues and expenses and things. And I think that's where they came up with the $500,000 figure for our firm. Is we do about, you know, 1.3 million in revenues a year. And if you look at our hard expenses, they're looking to give you about 6 months worth of funding. And so I think that's how they came out with it. They gave me email notices, so you got to be sure and check the email that you're going to. They give you an initial email notice saying you've been approved and how much the approval is for. Okay? And don't think this has to be just someone borrowing $200,000. My wife and I own a couple of RVs, have a little side business called Leisure Time Rentals, and we rent out those RVs during the summer. Well, I can tell you, we had absolutely no bookings. We're usually half booked up for the summer. By now, we had no bookings as of May 1st. So we applied for an EIDL loan, and we weren't approved for $500,000. We were approved for $9,000, okay? But they also gave us a $1,000 grant, the advance on the EIDL. So in total, we got $10,000, and that will help pay the payments on the storage and the RVs and things like that. So don't feel like the EIDL loan is only if you need to go out and get $50, $60, $70, $100,000. Go ahead and apply for it. You at least will get that initial advance on it, which is forgiven unless you also have a PPP. In that case, they will deduct the initial grant from your PPP forgiveness. But again, the loan agreement done completely online with the SBA, and it was funded within 48 hours. And it is far more flexible, and it is the EIDL loan, frankly, that gives me peace of mind that I'm not so worried about where we're going here. All right, and then PPP, as we know, was based on earlier payroll period. I won't spend a lot of time on this because I'm assuming most of you already applied. So it's average payroll for 1 year or other periods if it's new seasonal. 75-25 split is what's been established by the SBA by regulation. If you haven't downloaded their final interim rule, it might be helpful to do that. It actually reads in plain English, and it has a lot of Q&A in there. And you have to maintain that split. So what does that mean? Out of your PPP loan, 75% of it needs to be used for payroll costs. Those include, though, group medical, retirement, vacation pay, those sorts of things. Okay. The other 25% can be used for rent, utilities, and those sorts of things, and still to be forgiven. So you may want to team up with your accountant a little bit and see, how you can do this. And literally what we're doing on a payroll by payroll basis here is we run our payroll from our regular business operating account. Then Crystal creates a spreadsheet where she takes the wages and salaries. She adds to it the group medical. She adds to it the contribution to our 401ks on behalf of our employees. We don't have any local taxes here, so we don't do that. She adds those all up, and then she comes and she creates a document for me, and we just transfer those money into the operating account. So we have a very clear audit trail. The other thing you have to do, and this is the thing I started to worry about, you have 8 weeks from the time the loan is dispersed for you. So if you will recall, I said we got funded on April 10th, a Friday. That started my 8-week period, or 56 days, which is the covered period of my loan. During that time, I'm supposed to keep my salaries and wages at 75% of their prior levels. So I can't go in and take and reduce my employees' payroll by half. I have to try and keep them at least at 75% of prior levels, and then I have to maintain my FTE headcount. And those of you who applied for PPPs, remember, they asked you to calculate over the last year what was your average number of full-time equivalent employees. And keep in mind, salaries and wages subsidized up to a maximum of 100K annual cash. That doesn't mean that it can't reimburse up to the 100K. It just means anything over 100K. What is best practices? Well, here's your lesson for today. Money is fungible, and I've had people ask me, what is that word? Fungible. Well, dictionary.com says being of such nature or kind as to be freely exchangeable or replaceable in whole or in part for another of like nature or kind. In other words, if you have $10,000 in your operating account, and you add $10,000 from a PPP loan, you now have $20,000 in your account, and then you start writing checks, and you don't create an audit trail. How do we know which dollars you spent on what? That is why it is critically important to create an audit trail as part of your expenditures. And in QuickBooks, you ought to set up, when the loans come in, set up a separate account in there and just call it PPP loan proceeds, so that you then can go and properly account for things, move them back and forth. And then when they get forgiven, it is other income, but it's other income not subject to federal income taxes. So again, as I said in our prior webinars, segregate your loan proceeds into a separate account. Even if you haven't already done that, go do it now, all right? Draw against them only for eligible expenses by transferring. Go back right now. If you've got, I'm assuming many of you didn't get funded as quickly as we did. So you may only be, we're almost 6 weeks into our 8-week period. You may only be 2 or 3 into yours. Go back right now and create your audit trail, because that's at least a contemporaneous record that'll save you. Document what you're doing. Create a transfer memorandum signed by the owners or whoever, maybe you and your accountant, with supporting documentation of what these eligible expenses are, and make it clear that ineligible expenses were being made using other funds. So you see, if I pay all my payroll, I pay my rent, and I've created a memo that allows me to demonstrate that, then I'm free to take money from my earned revenues that have gone into my operating account and pay expenses or pay other things that weren't qualified for either the PPP or the EIDL. Forgiveness is a great thing. The SBA issued Form 3508 last week. If you want, you can just go to sba.gov, click on the COVID-19 thing. But here's the address right here. You just go sba.gov, government, SBA form, paycheck protection. It is one of those forms where, kind of like the IRS, it just includes all the instructions, along with it. I will tell you what Professor Chemerinsky used to tell us in bar review. It is a reading test. So I want you to pay very careful attention right now. If you can pull up the Paycheck Protection Program, you can pull up that PDF right now, do it, okay? If you've already downloaded it, let's take a look at it. I'm gonna turn off my share so that I can look at you folks. There you all are there. Okay.
Robert, if I could interrupt for just 1 second, just so everyone knows, that application is on our website under the COVID-19 resources, and it also went out in an email yesterday. So it's easy to find if they don't want to write down that link.
Yeah, okay. So what I want to do is I want to direct your attention to page 1, down near the bottom, where it defines, well, first of all, it talks about covered periods. It says, enter the 8-week or 56-day covered period. Now, there is an alternate covered period if you have a pay period that is biweekly or more frequently. In other words, you run payroll biweekly, every other week, or more frequently, you can adopt an alternate covered period, which would coincide with your first payroll after you got your loan, and then after that. But if you're not biweekly or more frequent, then you must use the covered period, which is the date of disbursement of your loan plus 56 days. If you're not good at calculating dates, use a little thing that we use all the time when we're calculating court deadlines. Go to timeanddate.com and just look for date calculator, and you go in there and you say, in our case, April 10th, add 56 days, and it came up with June 5th. So that way you can look at it and know, okay, that is my covered period. All right. Now, page 2, and if you don't have it in front of you, just jot it down. Page 2, about halfway down the page, it says summary of costs eligible for forgiveness. And I'm stressing this because Crystal and I, my partner, and she's an estate planning and business attorney, we were going over this yesterday, and sometimes you sort of gloss over when you read things. You got to go back. I'm going to point something out to you here. It says here, borrowers are generally eligible for forgiveness for the payroll costs paid and the payroll costs incurred during the 8-week, 56-day covered period. And those are called payroll costs, right? And after that, payroll costs are considered paid on the day that the paychecks are distributed or the borrower originates an ACH credit transaction. So payroll costs are considered paid on the day you issue the paychecks or do the electronic transfers. Payroll costs are considered incurred on the day that the employee's pay is earned. So for example, we're all at work here on Wednesday, my employees are here, I'm incurring that cost today. Payroll costs incurred but not paid during the borrower's last pay period of the covered period are eligible for forgiveness if paid on or before the next regular payroll date. This application is the first place where they made it clear that you can recoup payroll even though your covered period has ended and your payroll date is after that covered period, you can still include the payroll costs that were incurred within the covered period so long as you pay them by the next payroll date. And I wish we had interaction to see if anybody has questions about that.
Robert, I have 2 questions from the chat that you've kind of answered, but I'm gonna just read them both for you, okay?
Okay.
All right. I was funded for my PPP on April 20th and also received EIDL, $1,000 for headcount up to 10K. Can I pay for the EIDL 10K from my PPP? That is my understanding. If so, how does my PPP accounting work? You can probably see it in the chat too if you need to.
I don't have the chat window open. Where can I find my chat window?
On the bottom of your screen, there should be a
Oh,
chat. And
chat,
if you
there it is.
click, it's
Funded
from Ian
for,
Johnson.
let me qualify this. If I get too much into giving specific advice on specific circumstances, I form an attorney-client relationship, which I'm not wanting to do. So you're confusing your EIDL grant with your EIDL loan, it appears, Ann. So you said you got your EIDL. That is your EIDL grant.
Right.
I assume your loan is still pending. Can I pay for the EIDL 10K from my, I don't know what that question is. Can I pay for the EIDL 10K from my PPP?
You hear me? I can talk now. So I've got PPP and EIDL. I've got the EIDL grant, the 10,000. I want to use my PPP because I've received both. I have to pay for the EIDL. I understand that. And can I use the 10,000 out of my PPP to pay the EIDL? And then my question is, how does my accounting work after that to repay?
And I'm sorry, your audio was really choppy, so I really couldn't understand what you were saying. Secondly, I can't advise you, it's too specific. I'm gonna have to counsel you to talk to a CPA or to talk to an attorney, because if I gave you specific advice and you relied on it and something went wrong, we would have formed an attorney-client relationship. I sense you're talking about a 10K. Yeah, you received 1,000. Yeah, I'm just not clear. So I think probably that needs to be taken offline, Ann. I'm sorry.
Okay, can you read Joel's question, Robert, or do you want me to read it to you?
No, I got it here.
Okay.
For the PPP, 75 to 100% can be spent on payroll costs. 75% is, yeah, no, we may spend 100% of ours on payroll. We may use EIDL to pay the rent, but there's no restriction. You can pay 100%. Your 100% of your PPP can be applied to payroll. There's no maximum. They're just saying they want at least 75% to go to payroll.
And then on to
period,
Mina's question.
Mina, covered period, you can adjust your period. Yeah, look at the thing. It says if you're bi-monthly or more frequent, then what you can use is rather than the day your loan is funded, you use the next payroll period. Keep in mind, when we looked at this, we thought what happened with us is we got funded on April 10th. We had a payroll the next week that included time prior to April 10th that we paid that entire payroll out of PPP funds. Now, we will run another payroll, I think, next week, but then won't have another one until after our covered period ends. What this says is I can use the PPP funds to pay all of that payroll that I actually paid out, payroll costs paid, plus I can reach back from my payroll period that occurs after the covered period and still claim the covered period salaries that are included in that payroll that falls outside the covered period. Now, what I've discussed with my partner and my firm administrator is, let's just keep this a clean audit trail. So what we're going to do is we're going to run an off-cycle payroll on June 5th, which is the end of our covered period, which will give us a nice little report that includes all of our payroll costs just during our covered period. Okay. All right. Let me see where I was at in my presentation here, because I don't want to get. Okay, so I hope everybody is clear on how you calculate the payroll for forgiveness. Oops. There we go. All right. Now it's like, okay. So that's it. We had an issue. This is an interesting thing. How many of you heard, maybe have experienced, we did furlough a couple of people and we decided to make one of them a permanent separation when this started. The other one was an attorney that I just like, there's no new business coming in. I basically shifted her to a percentage of revenues, and she worked from home and stayed home for about 2 or 3 weeks. We got the PPP loan, and I sent her an email the following Monday, said, okay, we've got the cash in the back. I need you to come back to work. And she said, thanks, but no thanks. With the federal augmentation of unemployment, I know several people who are earning more on unemployment, and this was one of the bugs they knew was in this bill, but they couldn't get it fixed. And there are people earning more on unemployment than they earned when they were being employed. Well, if you stop and think about it, why does that matter to you? Well, because you, as the recipient of a PPP loan, are supposed to maintain your full head count. And if your employees won't come back to work, that affects your head count. Now, in our case, we actually did some other hiring, and so we were all right there. One of them was a misfire. The lady was with us for, I think, 2, maybe 3 weeks, and just said the job was too stressful for her. And so she resigned. So we're sitting here, and I was worried about it yesterday before this application. So I came back and I looked at it, and there is a neat thing. And if you want to jot down a note, this is on page 8 of SBA Form 3508. And, it's kind of back near the end where you might be tempted to just, oh, that won't apply to me. This is really important. PPP loans have an FTE reduction exemption for the following: any positions for which the borrower made a good faith written offer to rehire, sorry for the typo, an employee during the covered period which was rejected by the employee. Well, I read that and I immediately went to my, my HR folder on my server, pulled up this, and here was this beautiful MOU that I had prepared, offering her. It had all the whereases, whereas we got the PPP money, whereas we're coming back. Now we're offering her to come back at this amount. And then I've got an email from this employee saying, sorry, but I think I'll just go do something else now. The nice thing is, under this exemption, I still get to count her FTE now for purposes of forgiveness. So even if my FTE with the resignation of this attorney and the misfire on hiring the legal assistant, even if I would have normally been down 2 because one resigned or both and the other refused a written job offer to return, I can still count their FTEs, all right? And by the way, when you count an FTE, if you've got part-time employees that are working, say, 20 hours a week, the application allows you to count them as a 0.5 FTE. So you might have 5 full-time employees and 6 part-time employees. That could still give you 8 employees if that's what you needed, okay? So there on the slide is, we're fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in their hours such that they're not an FTE, a full-time equivalent. You can still count them as a full-time equivalent for purposes of the FTE reduction calculation. Okay. We discovered what your covered period is, and I see one of the comments. So it says, my fund came in on 4/14 and payroll 4/16. Mina, is this, yeah, bi-monthly, and a payroll 4/16. I can't use that payroll, or can I, since incurred prior? No, if that pay date fell within, again, we're kind of getting into specifics there, but what we're talking about is, do you want to start your covered period on the 14th when the funding came in, or on the 16th? 2 days, I don't know that it matters much, Ms. Patel, okay? So, I mean, that's what it does, the alternate. And in your case, it's just shifting a date. And I think it's probably to make your accounting easier. So, by default, the day your loan is funded, the 8-week, 56-day covered period. Employers who pay bi-weekly or more often may elect. That's what we're talking about there. So just be sure you understand payroll costs paid and payroll costs incurred during the period are eligible for forgiveness. Okay, so even though the payment made on the payroll the first week after you got your money was for time before you got the loan, that's perfectly fine. That's reimbursable. Where this really affects this incurred is at the end, and that's, let's say you had 11 days within the covered period that were paid after your covered period ended. You can, so long as you pay them in the next payroll period or before, look back and include those wages and salaries, even though they were not paid till after your covered period ended. So pay attention to your covered period. And I think that's all I've got in terms of the slides. Let me just look real quickly here. Sure there wasn't anything else. Are there any other questions?
Feel free to let us know via chat and we can unmute you if you can't unmute yourself.
Now, I have heard through the grapevine, and you got to know there's a lot of rumor, that there's additional guidance coming. I don't know what that means. I did notice that, you know, when you signed off on your PPP, you basically agreed that you would follow the rules in effect at the time that your loan was issued. So you may be bound to it, even if they have different rules for future PPPs. The CARES Act, which was voted on last Friday in the House of Representatives, the 1,815-page bill that includes lots of pork, does include a provision that would extend the covered period from 8 weeks to 25 weeks, both for maintaining full-time equivalency and for the salary thing. But don't be fooled by that. Just because you hear something is in a bill, unless the bill gets passed in that form and signed by the president, it's not in effect yet. But there is language in there, and that's been part of the criticism, is that particularly with the delays in funding, getting the money out, you need more than 8 weeks to get your business back up and humming and functioning. So what I read in this most recent bill was that they were looking at extending it to 25 weeks, and there is a suggestion of changing by legislation. The 75-25 split was done by the SBA administrator. They have in the legislation to change that to be a 50-50 split so that you could use 50% of the PPP for sort of those other expenses, rent, utilities and things, and 50% of it for payroll costs. But again, both the revised split and the longer covered period are in a proposed bill that Senate leadership has said is dead on arrival. Now, whether those sections will be pulled out of there and put into a future bill is an open question. So there is still a little bit of uncertainty there. There is also some language in some of the stuff that says if your head count went down, you have until June 30th to get it back up. But I don't know how, I don't see where you fill that in, or, you know, do you wait to seek your loan forgiveness till after June 30th? There's still just a lot of gray area and some unanswered questions with regard to some of that full-time equivalency. Yeah, someone said, can you address the possible changes coming in the latest act? I've shared what I know with you, but I would operate based on what we know is here today, because I don't know when that next one is going to be passed. I think you have to manage your business, do the compliance, keep your allocations in place as though you are bound. And in fact, because your loan has already been funded and you agreed to these terms, even if they came out with different terms for the future, you may still be bound to these original terms. Does the language in the bill indicate whether you would need to go through? I haven't read the bill in that much detail. I mean, frankly, I downloaded the 1,800 pages into Adobe so that I could make it searchable. And then I searched for terms so that I could find it in and among the 1,815 pages of the bill. And I just don't recall whether this was a second bite at the apple, or whether we could extend or we could go back. I just don't know. On an EIDL, an economic impact disaster loan, my understanding is that even though we were authorized for more, we only took 200,000. It is my understanding I could go back and seek an increase if I needed one later on because I was previously approved. So I could get additional funding there. The PPP, unless they dramatically change that legislation, or include something in the new bill. But I think we are probably some weeks away from seeing whatever it is. I know these Senate Republicans, and this is something that should be concern of all of us, is they're concerned about the liability. Lawsuits by customers, lawsuits by employees if someone catches COVID-19 in your facility. I will tell you that as an attorney, I get emails all the time pitching continuing legal education and things like that. And we are being bombarded with how to be plaintiff's counsel against employers and businesses in COVID-19. And you may have seen the ads on television where a guy is saying, were you screwed out of your PPP by your bank? And that seems like a really odd ad, but that's where it's at. So, any other questions? I've got us down here. Look, every time we're about 50 minutes, Andrea.
Does anyone else have any other questions?
Let me just recap.
Okay.
Document, document, document. Segregate, segregate, segregate. Use these funds for the purpose for which they were intended. And as long as you act in good faith, worst thing's going to happen is you might have to pay something back. Okay. But if somebody does come a knocking or calling, be truthful with them and probably invoke your Fifth and Sixth Amendment rights, which are right to have counsel present.
Robert, you got one more question.
Yeah, that's why you don't get legal advice from a bank. The question is, my bank said that getting both PPP and EIDL, you cannot use it on the same things, lease or utilities. I'm aware of nothing that says that, okay? Now, I mean, I think it's better to divide that, just keep track, don't commingle those funds. So the way we're set up is we had an account at Bank of the West where we have a line of credit that was just a checking account and had nothing in it. So I had my EIDL funds put over there. My PPP funds came from the bank where my operating account is. So I had them take a separate and create a separate account that just has my PPP funds in it. And those are there. So I'm the guy who makes the decision on how to use those funds. If I choose to use all my PPP funds on payroll, I can certainly pay my rent with EIDL funds. So to say that, you can't use it on the same things, I don't really know what that means, because you wouldn't want to double pay your rent, right? But I mean, you might pay, in fact, I think we did. I think we threw our rent into PPP last month, yet next month it'll come out of EIDL. They are both permissible expenditures from those accounts. Keeping in mind, EIDL has a much broader scope of things. For example, my EIDL loan we're running advertising on Comcast cable. And so we actually used it for our video production. That is working capital, all right? So really it's aside from giving bonuses to yourself or key employees and things like that out of EIDL and doing a few other things that are enumerated in the Small Business Act, there's very little limitation. They don't want you paying off long-term debt and stuff like that or buying real property with them, all right? And if you're gonna move, you gotta get permission from the SBA. But other than that, it's operating capital. It's the PPP that really has the very tight restrictions of mortgage interest, not mortgage principal, mortgage interest, rent. That can be mortgage interest on real or personal property, all right? So equipment leases, things like that, rent, and utilities. And utilities are very broadly defined. Telephone, electric, gas. There's even one in there called transportation. So you could use it for fuels and company vehicles, I think. You could probably use it for tolls and parking. All right, so those are all things. So that's, pay what you can with the PPP is what my suggestion would be, particularly if you can stay within the 75-25. And then the EIDL becomes sort of your general line of credit.
Thanks, Robert. Does anyone have any general updates from their business that they'd like to share with the group? Oh, and you got another question, Robert, from Patrick.
Okay, let's break this down. If you received a PPP, you cannot also receive the EIDL $10,000 forgivable loan, correct? You're mixing terms here, all right? So the lawyers say words have meaning. The PPP is a loan and the PPP is forgivable. When you apply for an EIDL loan, what they are required to do under the statute is they look at it and they give you a grant up to $10,000 as an advance on your EIDL loan, okay? So what happens is you get your PPP, then you get your EIDL. I'm trying to think, I think we got $9,000 as our EIDL grant because they kind of looked, I think, at our pay, a number of the head count we had. I think it's how they did it. So we got $9,000 as our EIDL grant. If you did not have a PPP, that's free money. That is truly a grant. Now, they followed up by giving me an EIDL loan of $200,000. What happens, however, is because I have a PPP, if I ask to have the PPP forgiven, the advance of $9,000 will be deducted from my PPP forgiveness. So if they forgive my entire $116,000 PPP, all right, which that's what they loaned me, or my firm, if they forgive my entire $116,000, they are gonna suck $9,000 back out of that, and I'll still owe $9,000 on my PPP at 1% interest that I gotta pay off in the next 2 years, okay? So, but if I didn't seek forgiveness of my PPP, they would never ask for the $9,000 back. Or if I just got an EIDL, I wouldn't have to pay it back. And the reason for this essentially is the PPP is a creation of the CARES Act, whereas the EIDL loan has been around for years. If you go and download the SOP on the Disaster Relief Act from SBA, it's a document about this thick. EIDL loans have been around long before the coronavirus. They're used for hurricanes, tornadoes, floods, all that sort of thing. So they're there. The CARES Act changed the terms of the EIDL to require, you used to have collateral above $25,000 and personal guarantees. The CARES Act altered EIDL to do away with those, to make it easier to get those. There was also another real bad requirement in the original EIDL, these are called Section 7 loans, that you had to prove you had no money available from other sources. So for example, I have a line of credit at Bank of the West. Under the old EIDL rules, I would not have been able to get necessarily a full EIDL loan or maybe any EIDL loan at all, because they would have said, well, you can just borrow from Bank of the West. They did away with that in CARES. So the grant you get when you apply for an EIDL is yours to keep unless you apply for forgiveness of a PPP, in which case your grant will be repaid from the forgiveness amount of your PPP. So therefore, whatever you received as a grant will remain as part of your balance. And remember, your forgiveness may not be for more than the principal amount of your loan. So the principal amount of my PP loan was $116,000, even though I don't owe any payments on it right now. There's interest on it. So what I owe to pay it off may be more than that. And if I wait to get my forgiveness done for 6 months, okay, it may be up to 120,000. So what'll happen is they'll forgive the 116. If there's, $8,000 less, they'll forgive less than, they'll take the grant out of my forgiveness amount, and I might owe on my PPP, I might owe $12,000, $15,000 that I'd have to pay back.
Great, thank you, Robert. I don't
He
think
said that was a spectacular answer. A spectacular answer.
You've gotten good information. Thank you. Great information.
It's all in the water
So
right here.
informative and helpful. Much appreciated. All right. Any other announcements from our members on the call? Okay. I think that's a wrap. Well, if you didn't know, we have launched a new website. We've finally combined the Chamber and EDC websites into one. It's awesome. It's nwdouglascounty.org. And so please go check it out if you haven't seen it. And also we have fantastic social media going on. Bree is our social media guru. So if you want her to push out on your behalf, please send it to her. And Andrea's kicking butt at the newsletter and getting information out to our members. So if you have anything you want her to put in the news, send it to her. And as always, all three of us are here for you, and we're going to work on the economic recovery as we move forward. So with no further questions, I think that's a wrap. So have a great afternoon. Thanks, Robert, so much.
Well,